But with that, I think we should get started. So thank you very much for joining us. Really appreciate it. It's a very cold night, and there's always a good reason to not sit in front of your computer. So thank you for taking the time. We're going to go over what it's like to be a first-time home buyer, and we're going to talk a little bit about what it takes to get into the housing market and what that buying process looks like. So let's click some buttons, get going here. Maybe. There we go. So UW Credit Union, you've probably heard our slogan, we're here for every you. And this, in fact, we live by this. Not only are we here for mortgage lending, which we're going to talk about tonight, but we're also here for your day-to-day needs, checking, savings, credit cards, or maybe you're just getting started in your working life and you want to buy your first car. We can help you with that. Or maybe you're a little further along and you want to start talking to somebody about retirement. We do have a wealth management team. So for every stage of life, UW Credit Union is here to help. I am your host, Todd Merow. I am a 15-year employee of UW Credit Union. For the first 10 years, I was a consumer lender, worked mostly with home equities, auto loans, credit cards, all of that. And in the last 5 years, I've been working in the mortgage area. For the last 3.5 or so, I've been a mortgage officer. Backing me up this evening is Rena Coutier. She is another mortgage officer here, and she is going to be working with our chat. And again, I would just say that if you have any questions, if you could put them in the chat feature as our Q&A is disabled. Rena will be answering questions, or she will be sending them on to Kenny and myself, and we'll answer them as they come up. UW Credit Union has 29 branches. We might even be up to 30 at this point. We're throughout Wisconsin, Madison, Milwaukee, and quite a few of the different college branches, Green Bay, La Crosse, Oshkosh, and so on. And of course, we have a massive membership base that does everything via remote. In fact, we have people in, last I checked, was over 100 different countries. And my son lives up at Ladysmith. He does all his banking online. And speaking of being far away, we can lend in Illinois and Minnesota. So we're out there and we're going to continue to expand as our charter allows us to. So tonight we're going to cover getting ready to buy a home, some of the steps that you're going to go through as you look at mortgage lending. And we're going to look at what it's like to look for a home and the actual aspect of buying a home. This is where Kenny's going to really come into his and really be able to explain what that looks like. So let's talk about home loans. So when you're getting ready to buy a home, you want to think about a lot of different things. Some of those things are when you want to buy. Are you looking to buy right now, or are you planning out for the future? And what does that future look like? Are you waiting to the end of a lease? Are you looking to finish a graduate program? Or perhaps you're sitting in from out of state and you're just taking a job in the Wisconsin area and you're looking to move here in the near term. What do you want to buy? Are you looking for a single family home? What are you looking for, Kenny?
I'd be looking for a single family home.
Okay, single family home, maybe a condo. Maybe you want to think about where you want to live. Perhaps you want to live downtown Madison, and that would be mostly looking at condos. And these are all things that you want to consider. Do you want to live on a bus line? Do you want a big yard for your Shetland ponies? And how much do you want to spend on a housing payment? You think about what you're paying for rent currently, and how does that feel, and how much more can you spend? Or conversely, maybe you want to spend less. And then what have you got saved? It does take some money to get into a home, not only the down payment, but there are some closing costs that are involved. And there are some other things that come up when purchasing a home that Kenny will touch on. And these are things that you need to think about. Also, big changes. If you're planning on maybe starting a family, cost of childcare can be quite a bit. So you want to keep that in mind, or perhaps you're looking at a big promotion, and what looks like a large payment now might not be in the future. Or perhaps conversely, again, you have a job that you don't like and you're thinking, maybe I want to start over and I'm going to look at maybe something a little less in the way of income. So let's talk about how much you can afford. Well, start with what are you paying now? And how does that feel? Now, one of the things that Rena actually used as an example, and still is from Rena, hope you don't mind, is if you're looking at, say, $1,500 a month now in rent, and you're looking at potentially having a $2,000 a month payment, well, take that extra $500 that you would be spending, put it in a savings account now, just so you get used to not having those funds. And it prevents payment shock. Thanks for that term, Rena. And one of the things you're going to need to learn about when you're looking at a home is what goes into that payment. There's not only there's principal and interest, but there's also the cost of taxes and insurance. You have property taxes, and then if you're currently renting, you're familiar with renter's insurance. Well, homeowner's insurance tends to be a little bit more expensive than renter's insurance. Also, if you're looking at a condominium, you have to take into consideration the cost of any HOA dues. If you're looking to have someone else shovel your driveway and mow the lawn like you would in a condo, someone needs to be paid to do that, and that takes the form of homeowner association dues. And those are also going to cover some of the other features of a condo, like some of the insurance that's tied to it. Other things that you might want to consider is any kind of upcoming expenses, like, for example, maybe your car is about to give up the ghost and you're going to need to replace it. I would encourage you to take a look at our online calculators, get kind of an idea of what rates and payments are going to be. And then you'll see that link for the qualifier. We'll send you a copy of the slides here later. But that qualifier will allow you to get kind of a feel for what you might actually qualify for and what might be comfortable. Now, what should you put down on a home? The old thinking used to be you got to put at least 20% down. Well, that's not the case. In most instances, people can get by with as little as 3 to 5%, depending on the property type and the actual, and the loan program. So with only 3% down, it is possible to get into a home. Now, you've also heard about mortgage insurance. This is also a consideration that you need to think about. And when you put less than 20% down, you're most likely going to be looking at paying private mortgage insurance because you are seen as being slightly more risky than someone who didn't put 20% down. But one thing to bear in mind with private mortgage insurance is it's not an all or nothing proposition. If you're putting 3% down, you're going to pay proportionally more for your private mortgage insurance than somebody who's putting 5% down. And that continues on every 5%. 5% down is going to pay less than 3. 10 is going to pay less than 5, and so on. So it's definitely something that we can help you work with. Also, when you're thinking about putting money down, a lot of times there are different programs out there that can help you with your down payment. One of the most popular ones that we use is called Down Payment Plus. It's through the First Home Loan Bank of Chicago, which we are affiliated with. And the way that particular program works, and I'm not going to spend a lot of time on these programs, but this one in particular I like. My own nephew used it. Rena, who I talked about before, she helped him get that. And the way it worked is you get a sum of money. These days, it's up to $10,000 that you can apply towards your down payment. And those funds are not repayable as long as you live in the home for 60 months, for 5 years. And we can talk more about that offline. If you'd like to give me a call, I'll be happy to explain it. There are also income restrictions on that, but we don't want to spend too much time on that. I want to respect your time. So the home loan application, well, let's start with the pre-approval. You can apply online. It takes about 15, 20 minutes to apply. And it's very similar in form to, say, TurboTax. Pretty easy to done. And I would recommend that you start a pre-approval before you start looking at a home. The reason being is you want to know what you can afford before you start making offers. And frankly, without a pre-approval, you're wasting your time and you're wasting a realtor's time. Fair to say?
Fair to say. If I could add one thing,
Please.
that you might fall in love with the home. Oh, bless you. You might fall in love with a home that you can't afford, and that's not a good feeling. So it is good to get pre-approved at a time.
There's a
Todd, Todd, there is a
Hi.
question that there's a question that I would rather answer instead of typing.
Please.
The question, do you stop paying mortgage insurance once you reach 20% equity in the home? Do you want to answer that so that everyone can hear the answer?
So the answer is a little bit more complicated than just getting to 20%, but not much more complicated than that. The way that PMI works is, let's say that you have a $100,000 purchase and you put, let's say 10% down. So that would be, we would need to get to $80,000 in order for you to be at a 20% equity position. Well, the way PMI works is it's based on time. When you're scheduled to be at a certain loan to value based on your amortization. And it's not actually at 80%. It will be timed to drop off at 78%. One thing to keep in mind is if you refinance at any point, more than likely you're going to be required to get an appraisal, and hopefully the value of your home will have continued to rise while you've been making principal reduction payments. You've been paying on your loan and your remaining principal is less. Hopefully at that point, you will be at a position where you are paying either less or no PMI. Also, at any point, you can reach out to our servicer and say, look, I've been making extra payments. I've also noticed that the homes in my neighborhood are selling for considerably more than I paid for it. And you can ask that they begin looking into removing PMI. That would also require an appraisal. And it's not a guarantee, but it is an option to look into. I've done this myself with my first home. Any other questions, Rena, at this time?
Do pre-approval hit your credit?
Yes, pre-approval will it affect your credit? Was that the question, or do we do a credit check? Did I hear you correctly?
Do pre-approvals hit your credit?
Okay, yes, we will be checking your credit. And the thing to know about a mortgage credit check is it's one of the least impactful ways that you can have your credit run. Reason being is because you're looking at maybe a mortgage, whereas if you're looking at, say, credit cards, you could go over a weekend and get a whole mess of credit cards and buy a bunch of stuff that just sits in the closet. A mortgage is an appreciable asset, and you're only going to get one at a time. Because of these things, the impact on your credit score is minimal. And we do one check every 4 months if you continue to renew an application. And you won't see any impact on your score more than a couple points that'll come right back. The other thing to keep in mind about a pre-approval is it's not fixed in stone. At any point, we can make changes to the pre-approval. And what I would recommend, and Kenny will probably talk to this a little bit more, is that you get pre-approved for the most that you would consider spending on a property, and then dialing it back unless you find that home at that upper price. We can also change the loan programs. We can change the down payment. The pre-approval is just a starting point. It's mostly to get us an idea of what is in your capacity and what you're actually comfortable with. Now, what's my role? Well, first of all, is to discuss your goals and objectives with you. And when we first meet or talk, unless you've already applied, we're going to have a conversation. I'm going to learn a lot more about you, learn about what kind of obligations you have, the condition that you feel that your credit might be in. We're also going to talk about money that you have set up, and we're going to get into the specifics and learn about your home that you're looking to buy. And I'm also going to help you learn the different programs that are out there. When we think about mortgage programs, everyone tends to think about a 30-year fixed, but that's just one of many different types of loan programs that are available. And through this back and forth, we'll figure out what might be best for you. And we're also going to learn about your credit, as we were talking about before. And if there's any things that need to be updated or repaired in your credit report, well, these are things that we can talk about and give you ways to do that without interrupting your lifestyle. One of the things we'd also do when we're having a conversation just back and forth is I'm going to produce a graphic like this. And it's going to give you an idea of what your monthly payments are going to look like. It's also going to look at what your out-of-pocket expenses might be. So you won't be surprised if we have this conversation before you have a pre-approval completed, because we'll actually give you a pretty good heads up as what to expect. Now, some of those things that we're going to cover is, the closing costs, points. Points are a fee that's on that right-hand side. I'm showing a no points loan. Those are my favorite type. But points are a fee that can come from Fannie Mae based on certain conditions. And we can address that more if people are interested in hearing more about that. There's also some other pockets, some items that aren't listed on here. Things like earnest money, home inspection, home insurance, and home warranties. And Kenny, you're going to talk about home inspections today. Yeah?
I am.
All right.
Yeah.
He knows stuff.
Few things.
So who's all involved in this process? Well, of course you are, but there's also a seller, and we're going to help you negotiate that, or Kenny's going to. I'm going to help get the money. So at UW Credit Union, there's me and there's my processor. And the two of us are going to be your points of contact here at UW Credit Union while we work through your loan. I'm going to help you get the loan set up, and the processor is going to help collect all the documentation that we need in order to get you approved. Once we have everything, we submit things to an underwriter who reviews the documentation and then verifies that you are in fact qualified. And then we move on to closing, and then post-closing after you actually close, and then servicing people will take care of your loan from there. And one thing I'd like to say about our servicing before we move on is that our servicing is in-house. If you're a UW Credit Union member now, and you're used to going online and you see your checking, savings, and all that, you'd also see your mortgage as another line item, and you can make payments on it right through the web branch. Then, of course, there's the realtor. I like realtors. There's also appraisers. Appraisers are going to help us determine the value of your property. A home inspector is going to help you make sure that this home is the home that's going to be right for you, given its condition. And you're also going to deal with a homeowner's insurance company, and that's going to be something that you deal with outside of the mortgage process. And then, of course, the title insurance company. They're going to make sure that the home that you're buying doesn't have any encumbrances on it that might mess with the title. And this gets a little wonky, so I don't want to really spend a lot of time on it. But if you'd like to give me a call, I'll be more than happy to explain in greater detail. So when you're getting ready to research for a home, you're going to need a really good realtor. And I just happen to know one.
Well, hello.
And you're it.
That's me.
So
Thanks, Todd.
Kenny, take it.
Appreciate it. So my name's Kenny Millman. I work with Matt Winzenried Real Estate Partners. If you're familiar with the west side of Madison at all, we're right across the street from the Target right off McKee Road. So feel free to stop in and say, hey. But a little bit about me. I just got married this last June to my beautiful wife, Katie. We have two cats, Ted and Fred. Fred is a little orange guy, and he is nuts. He's always running around, and he's very rambunctious. And Ted is, he's more my friend because he's chill. He lays around and hangs out with me for the most part. But Katie and I love the outdoors. We got to go to Yosemite National Park for our honeymoon. And yeah, we just love getting outside, putting our hammocks up and enjoying what the great state of Wisconsin has to offer. I saw some question just came
Did
through.
you get married at the Starlight?
At the Starling? No, I got married in Milwaukee. Where did I get married? The Black Swan. So yeah, it was lovely. So this is our team. We have 10 fantastic team members. So we have 7 realtors on our team and 3 administrative folks that help us out with our marketing, all of our day-to-day tasks, including our paperwork, making sure nothing slips through the cracks. We have an awesome transaction coordinator named Nate, and Nate helps organize things with Todd to make sure that the loans being processed, we're hitting on all our deadlines, and communicating with you, the client, to assure that you have everything you need to know in order to get to closing. Also, we've been happy to say and proud to say we've been the #1 in West Madison sales for over 8 years now. So really proud of that. I do work in all different parts of Wisconsin, outside of Dane County as well. So Rock County, Greene County, Jefferson County. So I'm more than happy to connect with you if you're out that way. And as a whole team, I believe this might be a little outdated. I think we're over 50 years of cumulative experience. So we have some great leaders on the team, and yeah, if there's something I don't know, somebody else on the team surely does know. So really thankful for that. Once you go through the pre-approval process with Todd and you know what your budget looks like, this is really where I come in. And first things first, I guess, why would you work with a real estate agent? Because I know you might be on Zillow or Realtor.com looking at properties and seeing things out there. Maybe you've been to a few open houses. Maybe you see signs with realtors' names on them that are selling those homes. Just so you know, those folks are representing the sellers. They're representing the sellers and the seller's best interest. When you hire somebody like myself, I primarily work as a buyer's agent. So I specialize in helping individuals purchase homes. So I love working with first-time home buyers. It's a very exciting time. And know that my responsibility as a buyer's agent, I work as a true fiduciary. What that means is that I have a legal responsibility to represent you in your best interest when you sign what's called a buyer's agency agreement. The way things work as far as commissions go, as a buyer in the state of Wisconsin, you don't have to pay me a fee directly. I don't charge a fee to any of the buyer clients that I work with. What's nice is that the seller, they pay a commission at the time of closing to the buyer's agent. Whatever they're offering is what I would get paid at that time. So if you're curious about how that works, that's how it works. So, but once we get you pre-approved and you have a budget, you know what you want to, kind of work with. Maybe you're looking for that single family home, or maybe you're wanting to start out with a condo. Set you up on a search. So might be a brashful opinion, but I think Zillow's overrated. So I recommend using the Collaboration Center. And this is a custom tool that I have access to, and I'd be more than happy to set you up on that if you reach out to me directly. The Collaboration Center, it lines up directly with the multiple listing service, which is what all realtors use in order to search for homes. I see a question popping in there, but I'll keep talking here unless Rena, you got something for me. So the Collaboration Center updates minute to minute with what's out there on the market. So you might be looking for something on Zillow and it says it's available, but it's already sold a couple weeks ago. So it can be a little frustrating. So the Collaboration Center is nice so that you're able to stay up to date with what is available on the market and what you're looking for specifically. And then we can start seeing homes. Some of you folks might be, ready to buy here in the next few months or sometime this year, or you might be, wanting to wait a year or two to see what the market does. Regardless of what your timeline looks like, I think it's wise to at least get out there and see what you do like and what you don't like, within your budget, of course. But there might be some parts of town that you prefer to be in, and maybe those different parts of town have, different architectural differences that you prefer, or, maybe, shops that are nearby, things like that. Also, what size bedrooms you like, the finished basement, kitchens, all the fun features that come with the home. And it's good to find out what you don't like, right? What features you don't prefer and what might not be necessary that maybe you thought it was necessary when you first started, but then you come to realize, well, maybe I don't need that, right? So that's why it's good to get out and start seeing things. Say we're going through that process and we actually find a house that you're ready to write an offer on, right? Once it comes to that time, we're gonna think about a few different things. So the first being earnest money. So if you're renting right now, think of earnest money similar as a security deposit. You know how you get that money back when you're finished renting? Well, when you write an offer and your offer gets accepted, that earnest money gets held in a real estate trust account by either the title company or the listing agent's firm until the time of closing. And then that money gets credited back to you, 100% of it, towards your closing costs and your down payment. What's typical is usually between 1 to 3% of the purchase price is what I recommend to folks in putting down. So say you're looking at a $400,000 home, I would probably recommend putting down $4,000 of earnest money. If you want to be more competitive, let's say there's multiple offers on this specific home, maybe putting down more earnest money would make you look like a more earnest buyer, that you're willing to put that much money on the line, that you really like that home. So But again, this money does come back to you at closing. So the next piece is the inspection contingency. Oh, I did see that question. Can you ever lose money can you ever lose your earnest money during the process? You can. That money is protected, however, by your contingencies. So first contingency of that being the inspection. So I'll get to your question shortly here. It'll kind of coincide with what I'm about to say. So the inspection contingency, from the time your offer is accepted, I write in a 2-week clause for us to get that taken care of. Now, might want to write this down. A cost that you can expect to incur along the way would be your inspection, depending on the size of the home and the location. It'd probably be between $400 and $600 to get an inspection done. And if there's nothing wrong with the home, if the home is in perfect condition, you'll still have a 20-page report as to how to care for that home. Maybe the home has an HVAC system, maybe the home's older and has a boiler, and you don't exactly know how to care for that. Well, the inspector in the inspection report is going to teach you how to care for all those items and how to upkeep with your home. Now, going back to the question of can you lose your earnest money? Let's say, for example, we get the inspection and there's a lot of items that came up on it as concern. The roof needs to be replaced. There's water seeping into the basement. Let's say we get a contractor in to get quotes and it ends up being $50,000, some crazy number. And we take this to the sellers and we try to negotiate and they're not willing to do anything about it. Well, at that point, as your realtor, this is where I really do come in and have these hard conversations for you on your behalf, is having that conversation and saying, hey, this isn't going to work if you guys aren't willing to negotiate. In those situations, I'm able to get you out of that offer and get 100% of your earnest money back into your pocket. If the sellers are willing to negotiate, then we negotiate. Then we come up with something that's fair, that you think is fair and the sellers think is fair. The legal term is a meeting of the minds. So we come to a meeting of the minds and decide on something that is fair to everybody and that we all agree upon. And then we actually sign documentation stating that you're going to get a price reduction or a closing cost credit with UW Credit Union that the sellers are going to be paying for. There's a few ways we could go about doing it. I hope that answered your question, whoever did ask that.
Kenny, there's another question.
Yeah,
for you. Can you speak on looking at a for sale by owner home when using a realtor?
Certainly. Yep, absolutely. So when looking for a for sale by owner, typically the owner is aware that they're going to be paying some sort of a commission to a buyer's agent. Now, when someone's selling their home by themselves, they are opting out of paying a commission to a listing agent because they, the owner, are acting as the listing agent. So typically they're saving the selling side of the commission. But if a for sale by owner is something that you're interested in, that would be where I would personally negotiate with the seller as to, hey, what are you willing to offer? And if it really is the home for you, I don't want my commission to necessarily get in the way of you getting your home. But 9 times out of 10, a for sale by owner, that owner is willing to pay some sort of a commission to a buyer's agent like myself. They're just not wanting to pay a commission to a listing agent. So I hope that clears that up for you. Yeah. Is it necessary to do an inspection contingency for a newly built home? Yes. So is it necessary to have an inspection contingency for a newly built home? I would say yes and no. I would also say it depends on the builder. I have a Rolodex of reputable builders that I love to work with. And I've had some folks who, I would probably recommend including an inspection contingency after the home is built. Now, I have had an experience where folks built a home and they had an inspection contingency, thankfully. And on the day of closing, they found water in their basement. And ultimately, due to them having the inspection contingency in their offer, they did not want to move forward with purchasing that home. And they did not. And they got 100% of their earnest money back. So now, I would probably on a one-on-one tell you more about that situation. But yeah, there are some reputable builders who I would say I would feel comfortable with you waiving that inspection. But every time you waive your inspection, I will have you sign a piece of paper saying that I recommended you get an inspection. So I do recommend that every single time, just because it's smart. It's a smart thing to do, especially if it's your first time purchasing a home. The last thing you want is a lot of maintenance right away that you weren't expecting. So I hope that answers that question as well. But yeah, so the inspection can be fun. It could be a great time. It could be really smooth, or it could be, you know, a little rocky. But that's what I'm here for. I'm here to represent you and your best interests. So throughout this process, you know, I just ask for transparency. Really tell me how you're feeling, because I'm here to be here for you, truly. So other contingencies that we will have written into your offer, one being the financing contingency. This is where my counterpart Todd and Rena come into play, and really they're going to be asking you for financial documents, and you can chime in here, Todd, at any point if you'd like to, but everything that they need to provide so that you can get your money in time for closing. Typically from the time we get an offer accepted to the time that we actually close, I would plan for about 30 days. I know, Todd, you were saying yesterday that you can get a loan commitment letter done in 21 days, which is really quick.
Or possibly less. We can,
Sure.
given today's market, we can probably go from a signed offer to closing in 21 days, potentially less. But this makes some assumptions. This assumes that everyone plays nicely and gets us the needed documentation in a timely manner, and that we're able to get things like appraisals. Now, sometimes if you're looking at a place that is rural and is not serviced by enough appraisers, it might take a little longer to get somebody out there. But on the whole, in today's market, we're able to get ready to get a commitment within 21 days for sure, and potentially even close that quickly. And we want to work with you and your agent to make sure that we are meeting all these deadlines, because the last thing that anybody wants is for you to be stressed out when you're trying to buy a home.
Right. Yep. Agreed. Yeah. So, I mean, that's huge, really, if you're able to get your loan commitment sooner, because I know maybe you've heard of people writing cash offers, right, on a property. How do you compete with that if you're getting a mortgage? Well, that is one way that you compete with it. Is the reason some people like to accept a cash deal is because they can close quickly. But if you have Todd over here saying, hey, we can close in 18 days, well, that's a very quick closing, and therefore you can compete with some of those cash buyers. So, but in a more normal world, call it 21 to 30 days from the time that you get your accepted offer to the time you get this loan commitment letter. And once you get the loan commitment letter, I deliver that to the seller's agent, the listing agent, and we have satisfied your financing contingency, right? Along with the financing contingency is the appraisal contingency. So Todd and his team are going to have a licensed appraiser come to the property to assess its value. And whatever that value is, they bring it back to UW Credit Union and say, hey, the home is indeed worth X amount. Once Todd and his team get this appraisal, that is then how much money they are willing to lend you. So I don't know if we have any questions or if you have any.
Speaking of appraisals, I would like to point out that recently we got some numbers today, and I think a full, Rena, correct me if I'm wrong, but over 20-some% were actually coming in above the appraised or above the offer price in the last year, and 60-some% were coming in at. So
yep.
Vast majority of our appraisals come in at or above your offer price. Now, that's not to say that our appraisers are doing anything untoward or shady. It's just the way that well-written offer is going to be accepted, and an appraiser is going to look at proper data. So,
right.
The appraisal concerns, it's a pretty rare thing that an appraisal is not going to come in where it needs to.
For sure. On that note too, if we are walking into a property, I do have access to look at comparable properties that have sold recently. So if we're looking hypothetically in Verona, right, and we're looking at a property and you're curious if the property is worth that much money, that's something where I can actually send you comparables to say, yeah, these properties that have sold, these comps support that value. And that's something an appraiser is going to look at as well. So we can sort of anticipate where the appraisal could come in at based on some of that data. Rena, do we have any other questions over there?
Yes. So I am just fielding the questions that I feel like everyone who joined us will benefit.
Sure.
Should anything unique be taken into consideration if I am looking to buy and move indirectly from out of state?
Sure. Yeah. Well, I would ask, do you have access to come here? But I actually have helped clients from not just out of state, but out of the country buy a home with, believe it or not, without actually seeing it. So one thing that we do offer, it's been a lot more common, since 2020, is virtual tours. So I do FaceTime folks through properties. I do usually have access to 3D tours for the majority of properties so that we can view it. And if you are coming from out of state and we are doing virtual tours, I will be as critical as I possibly can when it comes to that property. No matter how beautiful it is, I will give you my honest opinion about it. And I will try to find all those small little things because I want you to know what you're walking into. I don't want to sugarcoat it, so to speak. So I'd say really, if you're moving from out of state, like having a good team like Todd and I, we're really are here to help you and making you feel as comfortable as possible. But yeah, happy to answer any questions too. If you are coming from out of state, if you're curious about school districts or certain areas, here in town, or what different kind of architecture is out there, things like that. That's something I'm more than happy to connect with you about and tell you more about that process for sure.
Todd, would you like to answer on the lending pre-approval aspect of this question?
For out of state lending, yeah, one of the things, if you're employed, one of the things that we're going to be looking for is a letter from your employer or an email from the HR department saying that you have the ability to work remotely. One of the things that we need to look at is where you're living and the distance to work if you're not allowed to work remotely. Fannie Mae, who is the lack of a better term, the funder of most of our loans, it's a quasi-governmental agency that provides the funds. They have rules in place, and the short answer is if you're more than an hour away from work, they are going to scrutinize your loan because they're going to wonder how long are you going to want to make this commute. So that's something to think about. Also, but if you are moving from out of state, we can certainly work with you, and we're happy to do that and get you in touch with Kenny if you aren't already working with somebody. And if I have experience in the area, I'll give you my opinion as well. I'm a lifelong Dane County resident, so I know the area very well.
Oh, and just to add, if you can provide a letter that you can work remotely, let's say, for example, from Minnesota, moving to Wisconsin, that will work for income documentation. Otherwise, if you're moving because of a new job, we just need a signed job offer that shows the new salary for the reason for the move, and then most current pay stub before we close.
And Rena,
or at a certain 120 days, right? After closing for the pay stub.
I believe it's 90.
90 for Fannie Mae.
For Fannie Mae, correct. Yeah, I think we have an exception to go to 120 potentially on our internal products.
Mm-hmm.
So what the point, what Rena and I were talking about there briefly is if you're moving here and you haven't started your job quite yet, it is possible to close on a purchase of a new home prior to actually starting that job. There are some rules in place. Like, for example, you would need to have funds in place to cover any obligations that you would have. That would include the cost of the home, insurance, taxes, etc., plus any other obligations that you have, maybe student loans, maybe an auto loan. We'd have to have enough money in reserves. That could be money in savings, could be in retirement accounts and whatnot. Just money set aside to cover any span of time between when you close and when you actually start your new employment.
Sure.
So great questions on moving in from out of state.
Not sure if anyone's thought about building a home, but that is something that I do help with and that Todd helps with. Sure. Yeah, so just understanding the value of some of your selections. So that is something that I have a lot of experience in. Some of the selections that you might make could significantly increase the value of your home in the future. Some of the selections you make could, on the contrary, just be money that you're spending because you like what you picked out. A $10,000 chandelier might not get that money back down the road, but if you do invest your money into your kitchen, that actually yields you a return. Little tidbit, the two things that sell homes the most are kitchens and bathrooms, if you were curious. So this is something that I really love doing. I love helping folks through the building process, whether that's a turnkey, which Todd can talk more about, or whether that's a true custom build where you're actually procuring a construction loan. So I do have contacts with, oh, go ahead.
Oh, sorry.
Oh,
So
no.
there's a question of how can you determine if you qualify for a WIDA loan, but we can park that question and answer it later.
Okay, yeah, sure. Yeah, we'll keep that one on the back burner here. Yeah, so when working with the builder, kind of that story I told earlier where, it didn't work out due to, lack of the builder, actually coming through for some things towards the end there. I am looking out for your best interest during the building process. So I am present for all the inspections, the walkthroughs. Sometimes it can be overbearing. So let me know if that's the case. And, I can give you your space, but I really do love to be there for the HVAC walkthroughs, the electrical walkthroughs, to think of, hey, where can where should I put my outlets, things like that? Or what would you put, in this room as far as electrical goes? Like, did you think about, running a Smurf tube, for your entertainment center? Things like that. So this is stuff that I really do enjoy doing. So if you are thinking about building, I'd still love to connect with you on that front and get you connected with a great team of builders that'll take really, really good care of you. So if you want to meet with me, Todd's office is actually right across the street from my office. We can see each other through the window practically, literally, actually. So we'd love to meet with you. If you want to book a one-to-one with me to just learn more about the home buying process and how we can connect and get you set up on a home search with the Collaboration Center, feel free to scan this QR code. Links directly up to my calendar, and I have all my availability in there. So if you'd like to do a Zoom meeting or in person there at our office, I'd love to get you a cup of coffee. We're giving away $5 Starbucks gift cards for anybody who wants to book a one-to-one. So happy to provide that. That's right.
That's a deal.
That's a deal. So love to get you a cup of coffee. Yeah. Anything else, Todd?
Real quick on the construction loans. One of the things that there's a couple different types of construction loan. Kenny mentioned one. It's called a turnkey. That's think of like Viridian. Those are like just buying a brand new home, and you do have the ability to get involved in that, in picking out your amenities and such. And you're a little more familiar with them than I am, but it is a one closing proposition. You own it. I'm just buying a home. Mm-hmm. Traditional construction where you're buying a lot potentially, and the construction itself, those are a little bit more complicated, and that might be worth a phone call because they just tend to be, like I said, a little bit more complicated. But we certainly do a lot of construction lending as well.
Mm-hmm. Yeah, that turnkey is very unique because you truly are, you're picking everything out as if it is a custom build, right? Because it is, you're picking the lot, you're picking, the style of home, you're picking everything out typically in a design studio or at a couple of different vendors for your countertops, your cabinets, your door handles, hinges, everything. But the builder is getting a construction loan or using cash themselves to fund all of this until closing. And on closing day, you're just getting a mortgage as if you were buying a house, as opposed to you having to get that construction loan to buy everything along the way in that whole process, including the lot and everything that has to go into the build. So the turnkey is a really nice option to simplify the process for sure.
Excellent. Well, you got your offer accepted. Well, now what do? Let's click that button. First of all, you should call your friends, call your family, let them know the good news. Let them know that you've got a home, you're going to be moving out of the basement, whatever the case might be. Everyone's going to be happy for you and they're going to want to hear about it. But the very second thing you should be doing is you should be letting me know as your officer, letting Rena know, and getting us a copy of the accepted offer and any signed documents that go with it. Those are like amendments and addendums. Anything that goes with the offer, we're going to want right away, because we are going to want to get started on working on your loan as quickly as possible, even if you don't necessarily have a 18-day closing. I have some folks that are looking at closing potentially in May, but we definitely want to get as much done as quickly as we can, because it just takes some of the stress off. You know, once you're all clear to close and you're not worrying about whether or not your loan is going to go through, it just makes life a whole lot easier. So once we have all that documentation, I'm going to get it organized, get it sent to my processor. She's going to review everything that I reviewed. Basically, she's a backstop to continue to check my work. And then when she's done that, she's going to order an appraisal. The appraisal we try to get that to you as quickly as possible, or we try to get it completed as quickly as possible. If there's any issues, we're going to reach out to you right away. If there are no issues, we'll let you know, hey, we got the appraisal back, everything looks great. And then once we have all of that, then we're going to submit it to our underwriters, and they're going to review the appraisal, and they're also going to underwrite meeting. They're going to review all the other documentation, the pay stubs, asset statements, anything that we need in order to approve you. And then we provide what's called a loan commitment. A loan commitment is a letter that states Bill and Jane are approved to buy 123 Main Street. And we will issue this letter to you. You'll in turn get it to your buyer's agent, excuse me. And they in turn will get it to the listing agent, letting them know that we are on track to close on time. So that's how that works. And then we're going to continue to work with you right up until the closing, because there are numbers that are going to change a little bit. For example, potentially prorations might change. Maybe the sellers are going to pick up more of the trash bill for the year. We're going to reach out to you with they're called closing disclosures, and it'll have all the numbers in there. And I'm going to go over that with you so you understand what it is exactly that you're paying for and what you can expect will be due at closing. Because again, nobody likes a surprise. And we're going to start doing that about a week prior to closing. And then the closing itself. When it comes to the closing, I try to make it to as many closings as possible. The agent is going to be there 99 out of 100.
I must be there.
He's going to be there 100% of the time.
That's right.
Usually with a pie.
And some flour. And a bottle of something.
And a bottle of something. So any questions that you might have for us, more than happy to answer at this time. Otherwise, please feel free to give me a call, give Rena a call, give Kenny a call. We're here to help. We're here to answer questions, and we're here to help you facilitate the purchase of your first home. Or if you're not a first home buyer, there's always something that we can help with, and we look forward to hearing from you. And here we have a few links that are great. I did see a question about WIDA. You can learn a lot more about WIDA, who's Wisconsin Housing Economic Development Authority, by following that link. And I just saw a couple of questions pop up. Came up. Rena, what do we got going on?
Yes, so I answered this question on the mortgage rate side. One of the questions is, do you anticipate much changes in the housing market?
Yes,
Kenny.
We do. And Kenny and I were talking about this question earlier today and how we were going to handle it. So what we're seeing right now is we are still seeing that there's not a lot of inventory out there. And we are seeing, because of that, home prices are staying high. In and around Dane County in particular, we tend to be somewhat isolated from national, I don't want to scare anybody with saying the word recession, but even in 2008, 2009, we didn't see any significant pricing decreases throughout Dane County. Now, my point is, even as rates stay higher than that COVID low, we are not seeing prices drop. We're seeing some stabilization in prices, at least that's my perception. And as far as rates are concerned, what we're seeing there is very slow decline in rates. Now, that's not to say that rates can't jump back up. The market was down a little bit today, and the 10-year Treasury was up a little bit. The 10-year Treasury, it greatly influences rates. So we might see some fluctuation with rates. However, over time, we do believe it's going to be a general slow downturn in rates. And my hope is, and Kenny, if you can build on this, that would be great. My hope is that a lot of the folks that bought during COVID that are hanging on to their homes because the rates are so, that they got were so low, they're going to get to a point where rates are, okay, I'm willing to take a higher rate to get into a different home. And as they do that, it will free up some inventory.
Right.
That's my hope.
Right. It's a very unique balance and all that, and it'll never be perfect. But since rates were so low back in 2020, so many people did purchase a home, and they are still hanging on to that home because that rate is so low. It doesn't make sense to sell that home because then they would lose their low interest rate. So that's why you see this low inventory. It's record low inventories in Dane County. It has been record low the last 4 years. We keep setting new records for how little available housing there is. So that, again, that is why it's good to be on top of these things, to know, hey, what housing is becoming available that fits my criteria, because I recommend seeing it right away. I want you to be the first person through the door so that you have first dibs on putting an offer in, right? I think I'm already starting to see competitiveness in the month of December, which is very unusual. There's been 3, 4, or 5 offers on a property at a time. Over the whole 2023, on average, about 60% of properties in Dane County had competing offers. Homes that had competing offers are going for approximately 8% over what they're listed for. So that being said, the average price of a home in Dane County year over year increased 7.6% from 2022 to 2023. So house prices are still going up. I mean, I think our economy, some of you probably work maybe at Epic or Exact Sciences. I want to thank you for your service to our local economy, because there's so many jobs that are being supplied because of it. And specifically Dane County, even American Family, I mean, so many places all over the area are bringing in jobs and stabilizing our economy for that reason. So truly, we do have a strong economy here in Dane County. And I think house prices are, if they do fall off, I mean, 7.6% is falling off, because the year prior, we saw a 15% increase in the average home price year over year. Now it's 7.6% increase year over year. What a normal market is, it's 3 to 5% increase year over year. So we are seeing home prices continue to rise. Don't let that scare you, let that motivate you, because that just means, despite what some of these other markets in the world, or in the country more so, are experiencing, Dane County's not experiencing that. So your home is a safe investment here in the area, which is an awesome thing. We really do have a great market. And like Todd said, in 2008, I believe we saw a 5% decrease in the average price of a home. Could be wrong on that, but it's somewhere between 5 and 10%, as opposed to other markets experienced much worse. So we rebounded pretty quick after that in the 08-09 recession. So if you're into statistics and these kinds of things, please reach out to me, because I really do enjoy that stuff. My broker, actually, every week, he sends us new updates for what the average cost of a home is going for and things like that. So happy to talk numbers and all that fun stuff, if that's something that you're into.
Now, Kenny, a question about your perception of the market now versus, say, 2020, 2021. It seems like there's significantly less hysteria.
Sure.
And you're talking about there's still competing offers, but it's not 20.
Yeah, I think the most competing offers I ever saw on one property was in 2021. There were 50 offers on just one property. Crazy. Now we're seeing probably 3, 4, 5, or 6 offers on a property at once. You might see more competitiveness on a property if that property is priced low for the area. So if it's underpriced, again, I'll tell you because I see a lot of properties. I have a pulse on the market, so that's something I can tell you and saying, hey, I would anticipate there to be some competition on this given where it's priced at. And those situations, you might anticipate it selling for more than what they're asking for. But just because they're asking for a certain price doesn't mean the property's worth that. It could be worth more or it could be worth less. The property could also be overpriced. Those properties that are overpriced do not typically get competing offers. There's usually one offer or no offers, and it sits on the market for a few weeks or a few months until someone lowballs them and it finally sells. So every property is so unique and so different. So I can't say like, yeah, every time you write an offer, you need to write X amount of percent over their asking price, because everything's going to be so subjective that way. So that answer your
Yes, it does.
okay, great.
Thank you very much.
We have great questions here, and again, instead of me typing a specific answer, I might as well discuss it as a group, hoping that it will be useful to most of us. Another question related to moving from out of state. How far in advance of my target move-in date should I begin seriously looking at homes, making offers, etc.?
It's a great question.
That's a great question, and that can actually, we can broaden that question to include pretty much everybody, because it's not specifically an out-of-state question. It's anybody who's trying to time out an end of a lease. Now, one thing to bear in mind when you're talking about a lease, you want to think about when your payment on your new home is going to start. It's usually at least a month and a half later. You tend to skip that first month. So if you're trying to time out a lease, for example, let's say you closed in March, your first payment's not going to be due unless you close in the first few days of March. Let's say you close mid-March. First payment's not going to be due until between May 1st and May 15th, depending on what day you choose. So if you have a lease that you're finishing that's running through March or even into through April, well, you're still only going to have one payment that you need to be responsible for. Now, when you're thinking about the timing of getting ready and making offers, what I would recommend is submitting a pre-approval a minimum of 2 weeks before you're ready to get started looking at properties. The reason for 2 weeks is if there's any documentation that we need time to collect. Oh, yeah, that's a good one. I like that screen. It's a good one. So if you need any, need time to get documentation to us, that's a good reason for that. And then there's also anything else that might come up. And then it just depends on how long it's going to take for you to find a home. And then plan on 30 days from the time you get your offer accepted to closing. That's going to be the most common span of time. And then we can, tend to tailor that somewhat.
And if I could add to that also, I have helped folks where they said, hey, my lease is up in a month. We can work with that. We just got to work very, very quickly. So if you're say your lease is up at the end of this year or even next year, it's good to just start the conversation. That way you're on my radar for one thing, but you also kind of anticipate where you want to land, because as time progresses, your goals change, things change, life changes, right? So it's good to just know what's available to you, in case those things happen. So if you are considering moving in the summer or next year, it's good to just have that introduction and at least have yourself set up on a search like the Collaboration Center search. That way you're seeing what's coming available and you're like, oh, I kind of like that. Let's take a peek at it. Let's see what's out there. And once you see it, maybe you're like, I don't really like that neighborhood, or I don't like, that style of house. All right, well, now we're a little more focused. I can actually nix that from your search and we can hone in a little bit closer. And now you're seeing very specifically what is available to you. And you're starting to see how quickly things move as well, because you're seeing, oh, it's on the market. Oh, it's only been a weekend and it's sold. Okay, why did that sell? You can ask me that and I could probably tell you why. So you moving from out of state, happy to connect with you and at least just starting that process. But usually I would say if you have 3 months at least, that is a good amount of time for us to get you pre-approved, set up on a search, and it gives you 1 to 2 months to actually see enough homes to gain the perspective to make a decision. So.
Yeah, thank you. I have a popular question.
Okay.
It's two-pronged. Can you explain the process? Can you explain how the process would work for partners who are not married? So I assume they would like to buy a house and they are partners who are not married. And there's a follow-up question to that. What if one partner is not a first-time home buyer and the other one is a first-time home buyer? How does that work?
Okay, well, let's answer both are actually pretty easy questions. In that, it doesn't matter if you're married, domestic partners, whatever the case might be, you can have two people purchase a home and own it together, and it really doesn't affect how we work with it in any way. And as far as, gosh, I derailed myself. What was that? The second part was
What if
First time-
one person is a
first-time
first-time home buyer and not one, the other one is not a first-time home buyer?
for Fannie Mae is, and the way we work internally too, is as long as one of you haven't owned a property within the previous 3 years, we would consider you a first-time home buyer. And if you're going with, say, UW Credit Union on one of our portfolio loans, that would be like an adjustable rate mortgage, or one of our Fannie Mae loans, think 30-year fixed, you would be eligible for up to $1,250 in first-time home buyer credits. So yeah, if one of you hasn't owned a home, make sure you let us know, and we'll make sure that you're getting that credit and help you save some money at closing.
And that's unique to UW Credit Union, that if one person has owned a home and one person is a first-time home buyer, we give them the first-time home buyer closing cost credit. I know that other lenders don't do that. And just to piggyback, it's a personal decision on how you would like to apply together, whether you're unmarried or not. We cater to every application. And then first of all, I feel like a Howard Stern sidekick right now. There are great other questions here. Do student loans count against you when you try to get a mortgage loan?
We do consider those as a monthly obligation, and there are, if you're in deferment, what we've been doing, because everybody's been in deferment because of COVID, is we've been taking 1% of the balance and using that as the monthly payment. However, if you're on an income-based repayment, we will, and you can provide us a letter with what that payment actually looks like, we will use that. If we work with Freddie Mac, which is similar to Fannie Mae, we use 0.5%. And this is just for qualifying your debt to income ratios. Does that help? Rena's typing right now.
Yes. Oh, and then I have another question here. Are pest inspection recommended?
Oh, yes. So thankfully, in the great state of Wisconsin, it is freezing cold and it usually kills them all. True. I'm not being sarcastic. It's very true. So don't really recommend pest. However, if you are doing a VA loan, that is required to have a pest inspection. And the reason I wouldn't recommend a pest inspection is because for any and every VA loan I've ever done, I show up with the pest inspector to the home, and the pest inspector just kind of giggles and says, well, I'm here to not find any pests again. So, and that's more so for insects. However, your inspector, if they do find, say, mice, rats, things like that, that does show up on your inspection report if they do find things like that. There is another for bats. If you find bats in your attic, typically they can be found from the guang that is in the attic, and that is something that would also show up on your inspection report, and something I would be able to negotiate to be remedied prior to closing on your behalf. So insects, don't worry about them. Termites, don't worry about them. Unless you're doing a VA loan, you have to worry about them in some capacity. But yeah, all the rodents, bats, things like that is something that your normal inspector would look out for. So hope that helps.
Another question is, thank you for that. What is an average tentative time between giving an offer and a seller accepting it?
Yeah, it's a great question. Typically in the springtime is when things tend to get a little, I don't know if frantic's the right word, but a little more competitive. So oftentimes you'll see a house come on the market on a Wednesday or Thursday in the spring. And you'll have the weekend to see it. And then on a Monday or a Tuesday the following week is when they're going to be reviewing all their offers. And at that time, they will review all the offers they have in hand, including the one that we submit, and they will be accepting one of those offers. Now, in a scenario where that's not the case, maybe they are saying, hey, our property's listed, we're just reviewing offers as they come in, right? Then we can say, I mean, we could do a turnaround in one day. Say you see it in the morning, we write an offer and we say, hey, you got till tonight to accept it. That it could move that fast, which is crazy to think. It's really quick, but it does happen. And if you really like the house and you've seen enough houses and you have that perspective to make a decision that quick, then I recommend pulling the trigger in those kind of scenarios, because then you don't have to worry about other offers coming in and then inflating the price. So
we have another great question here. What is the process if you want to buy and then do a major renovation, no kitchen addition right away?
Ooh. Well, there's a couple of things that you can do. The easiest remedy is to pay for it out of pocket, and one of that could affect what you're putting down on the property. That's going to be the easiest remedy. The other option is to do what's called a 203K loan, which we don't work with. And what that is, it's a remodel, essentially. And it works similar to a construction loan. But I find that most people, if you're just looking to do a remodel, there's not like a major rehabilitation of a home, but a remodel, you're better off holding onto your cash and then using some of that cash to put towards the remodel. Another option is, if you're putting enough down, is you can come back and use a home equity loan to help finance any kind of remodeling that you want to do.
Mm-hmm.
That's what I have. Oh, sorry. That's what I have. That's all the questions I have for now.
Well, fantastic. Well, thanks for joining us, Kenny.
Yeah, thanks for having me.
Thanks, Rena, very much.
Yes.
And I want to thank our secret agent, Rick. He's been behind the scenes making sure that this all works. And so without him, we would just be standing here wondering why no one's talking to us.
Yeah. Well, yeah, thank you guys. Appreciate you coming out virtually this evening. And yeah, would love to connect with you guys more. So feel free to reach out.
Mm-hmm.
Thanks, everybody.
Thank you.